All right, good evening, everybody. Give me 1 second. The screen should be coming on. All right. Got a number of people popping in. Good to see everybody. Happy Tuesday. Hello, Michael. Good to see you, sir. We're going to give it just a second. A few people are getting their audio turned on. I can see. Excited to see our numbers picking up in here. And the reason I say that is because this isn't just like a, hey, let's go through and make sure everybody's foundation is strong, but because this is like a free-for-all Q&A. So anything where you're like, boy, I would sure like to discuss something Scott said here, this routine, this rule, this trade, this setup. This is a great opportunity. It's just kind of a free-for-all Q&A. I always say start with the presentation, anything specific to the presentation, and then let's any trading related questions, open it up. Sandra, glad you made it on time. My understanding is you guys are like 3 weeks off from us. I've had issues having been in coaching now for 15-20 years. There's always times where I work with people in different countries, but I think Australia, you guys are a few weeks off from the cycle from daylight. So it's like we switch and then we're off, and then you switch and then it goes back, or I don't know. Something happens. All right, welcome out everyone to the Market Watch Group Trading Foundations. Today we are talking about record keeping, such a critical component. This is a huge part of our core structure and routines. Something from the very beginning, you get access to a record keeping log for stocks, you get access to a record keeping log for options, you get access to a market posture log that allows you to store your analysis of the market over time. That's actually huge. So a lot of people think, oh yeah, we organize it, we see it. If I go back and I say, man, I struggled in August, I need to write you're going to see a big part of the why behind record keeping is the ability to learn from, to do better, to make better decisions based on track record. But I have to be able to correlate. I can't just look at my trading and be like, oh, here's what I did. I have to be able to look at the market, see what the market was. Then I have to look at what was my assessment for the market, because that might be all I need to know, where I say, oh, the market in August actually started pulling back and turned kind of bad, and I was still assessing it bullishly the whole month. I wasn't, just to be clear. I started to assess it right at the beginning of August, but that might be it, where you're like, I overtraded. I did. If I'm going to learn from something, I need to have the ability to have the markers, the landmarks that help me to go back and say, oh, here's what I did wrong. Here's what I can learn from this. So let's dive in. My name is Scott. I'll be your host. These are the disclaimers, as always. And this is our agenda for today. We're following the same basic format. So if you ever wanted to go in to your concept, if you're curious, if you're new and you're like, what else have you guys talked about in this foundations course of yours? Well, quite a bit. So there might be something about platforms or account types or orders or technical analysis or fundamental analysis or systems, strategies, and rules, right? We've gone through a lot of components of things that it's easy to take for granted and be like, yeah, I've got that. And then when you actually go through it and you see an inventory of how we cover it and the detail and how we want to integrate these topics into what we do day to day, our structure, then you're like, okay, that's helpful. So go back, take a look. What are we doing with record keeping? We're going to talk about an intro to what do we mean? What kinds of records? What are we doing with record keeping? Why does it matter? What types of records do we keep? That's important. And a lot of people are like, oh, why do I need to keep records? My broker, I have statements. Statements and records are different things. Yeah. Statements, certainly you can track the history of, you're going to need those statements to consolidate with your accountant. We do want to keep good records in regards to any taxable accounts that you have to make it easier to reconcile short and long-term gains, and give your accountant a leg up, or if you do your own taxes, give yourself as much information as possible. How to maintain effective records. What are some best practices and ways to do that? What to include in your records? What information do you need to make sure that you have? We need to make sure that the records that we keep prepare us to analyze that information for analytics. If you're not processing automatically and on a regular basis these records in order to produce data, the data is your feedback. That's what we're doing here. This is the scientific method. We have observations and theories, and we implement them, and we say, oh, what did that have? That was supposed to reduce my average losses. Well, great. How would you know that if you don't already know what your average losses are? And then you can keep track of what they are going forward, so you can see, did they get smaller empirically? Yes or no? This is a numbers game. The numbers mean everything to us. We want to make sure that the decisions we make are driven not by emotion, but by data, by observations, by behavioral patterns, etc. So we want to make sure we're prepared for analytics. Let's make sure we understand some common mistakes in record keeping and understand, even more importantly, how to avoid them. Make sure you walk away from here with some key takeaways to summarize this, and then make sure you have next steps to take. A lot of people, I've heard this already. I've heard this from people who said it and then they ended up dropping off. If you drop off, we hate to see you go. This service is only going to get better and better as we continue to add the features and establish the community. However, the feedback that I'm getting is the right feedback. They're keeping better records. They're seeing their trading more clearly because the data is clear. Identifying strengths and weaknesses. There's what we think we know, and then there's what the data tells us. And that's the more important story. So the better we are at record keeping, the stronger you're going to be as a trader. In fact, I didn't put it in my slides. One of my most favorite quotes says, show me a good record keeper and I'll show you a good trader. Who said that? Jack Schwager, the author of a very important set of books that details successful traders over literally generations. I mean, there's traders from the 50s all the way until now. So some of the most successful traders. And what is the common ground, the knowledge that we can glean from it? That was one of the big pieces. All right, let's dive in. Intro to record keeping, right? What is the importance of record keeping? That is our cornerstone of disciplined trading, offering us a comprehensive history of trading decisions and strategies. Record keeping is what allows us to monitor performance empirically, not what we think, what can we know. Learning from past mistakes, maintaining and developing and maintaining a consistent approach to trading. I used to do a lot more one-on-one coaching. I just don't have that ability anymore. But when I did one-on-one coaching, it was always interesting because the first hour session would always be Q&A. I would ask questions. What have you done before? Tell me your background and what trading and what books have you read or classes or courses or things have you done? What kinds of trading? Just asking question after question, trying to glean from them what's important, what have they done that's worked, what have they struggled with, and trying to have a good inventory of a starting point. And it's funny because I've always said this, but I say if I talk to someone for 2 or 3 hours versus if I saw a spreadsheet with 100 trades, and that's what my spreadsheet is designed to do. 100 at a time. When you're done with 100, learn from it, start again. It's your next iteration. Every 100 trades, we iterate, we improve. That's a very specific, on purpose, deliberate mechanism. But if I had 100 trades, I'd be able to go through and look at the streaks. I would be able to look at what they did versus what the market was doing. I would learn more about that person as a trader in 5 minutes with that spreadsheet than I would 3 hours in talking to them. Everything they do, every bad habit, every mistake, it's there. It's there in that data, right? It's there for us. It's gold. But we have to set up mechanisms that organize it into usable information. That's what we're doing here. So important. Well-maintained records empower us to make data-driven decisions, leading to more informed, profitable trading. We have a goal here, which is constant improvement. It's our Kaizen philosophy. This is what we're trying to do. We're trying to identify and correct mistakes. We're trying to adapt to changing market conditions. Like I said, that might be the mistake you made. You didn't adapt fast enough, or you tried to anticipate and you did too much too soon. You overtraded. That's a mistake I constantly look for. Did I overtrade? I'm only able to assess if I overtraded if I have a sense of market conditions. So I need records for both things. This is a differentiating factor. I've said this before. You'll hear me say it again. Successful traders do what failing traders don't want to. Things like developing trading plans that are 10, 12, 20 pages long. Really diving into and fleshing out the details of structures, of processes, of rules, of routines, philosophies. Really making sure that the records tell the right story and give us the data we need to make adjustments and improvements. Effective record keeping distinguishes successful traders that learn and grow from those who struggle to achieve consistent profits. I could tell you a story, but I'm going to give you the long and short of it. I was ending a job that I loved in trading education. It was 2008. For context, we were entering a really nasty recessionary period. Market dropped 50%, but we were at the end of a period where this company that I worked for, we had sold 2-year education program, 25 grand, huge. I mean, it was amazing. It was a beautiful package, but at the end of this 2 years, all of a sudden, the conditions aren't good and people are struggling. And I was at a Las Vegas event, probably 200 people in the room, and I could sense people were frustrated, and I just start asking questions. Right, I get you're frustrated, and we need to evaluate on our end as a company. Have we given you what you need? But I said, let me turn it back on you. 200 people, most of which had paid probably 40 grand or more for their education, and I said, question number 1, raise your hand if you have a trading plan. Of course, like nearly every hand goes up. I say, no, let me describe it. And I go through painstaking detail. What do I describe? Exactly what we have. I literally describe in detail our trading plan. Sections about you and your strengths and your weaknesses and your mission and your vision and how you read the market and how you develop implications for trades and rules for every trading system. Right, and routines and risk management and record, and I go through it all. And I say, if you've done this, you have it with you. Raise your hand if you have this plan. Out of 200 people, like 8 hands went up. Then I said, great. Now that we've got trading plans out of the way, let's move on to record keeping. Right? What are we doing with records? Same thing. And I went through. We're going to go through some of what we've talked about record keeping, right, and the data that you need to collect. We've gone through that as part of our trading plan development outline. But what we're doing here is we're talking about the specifics of it. And so I said, how many of you, I defined it. I described it in great detail again, exactly the same way. I said, raise your hand if you have record keeping. 5 hands. This is like 250 people. I said, raise your hand if you have both. 3 hands went up. Right? This was 15 years ago. this was literally, I went home, gave my notice. I never went back. I got a nice free trip out to Vegas out of it. I left to pursue other things. But that told a story to me that stayed with me for these last 15 years. People get so caught up in learning systems and strategies and the shiny new thing, right? Look at this guy doing this. Great, pick one, man. Honestly, I don't care. I could find you 15 different systems that would work. That's the point is you have to make it work for you, your time frames, your routine, the way you see things. So your records need to reflect that. And then you use your records to make adjustments, and you will build your trading to be successful for you. It's that simple. That's the path. You either go on it, and some people might be like, "Oh, Scott, you don't know what you're talking about." Great. Move on. You'll try a dozen other systems, and they'll give you these great marketing stories. And when you try it, it stops working, and you'll email them, and they'll be like, "Well, past performance is no guarantee of future," right? You know the drill. You've been around the block. You know what we're doing here. There is one path. So for some people, they're going to hear me and they'll be like, yeah, you know what? Trading's not for me. And I hope they do it before they blow up an account or draw down 50%. If you listen to what we talk about here, you won't draw down 50%. You'll hit 10 and you'll stop and you'll be like, all right, what do I need to figure out here? But we can't figure that out. We can't make those decisions. We can't get to that point if our core structure does not involve the trading plan, well-defined all the way through every section, and this core essential need for record keeping, right? I cannot evangelize enough that if you start doing it, you'll get where you want to be. If you don't, you'll never get there. There's no way to achieve long-term success in trading without these things in place. Let's talk about it more, right? Let's talk about it. Why does it matter? Sorry, man, I'm got on my soapbox, so I'm gonna speed up a little bit now. This is a bit of a repeat, but it's the role is to serve our history, to track the outcome, to learn from potentially from every trade. We look for patterns in stocks, patterns that we can capitalize on, right? We do the same thing in our own trading. Are you cutting losses short, or can you do better at that? Are you letting your winners run, or have you cut them? Have you gotten a little, a little antsy? You got out and watched it keep going. These are the things that help us to make those fine-tuning adjustments to how we manage trades. And again, that's the only way we're going to do it. We learn from past trades in order to produce continuous improvement. Yes, we can learn from both successful and unsuccessful. I believe you're going to learn 80 to 90% from your unsuccessful trades. If it worked, it worked. Great. Could you have done better? Maybe. If it didn't work, let's isolate it. We've standardized now, or at least we should have, every aspect of our trading. The way we analyze the market, the way we look for trades, the way we build watch lists, the way that we look for setup, everything about your trading should be standardized. So now you can go back and you can isolate those points and you can say, my entry wasn't good enough. I've got to get better entries. Great. Look at your setup. Look at your trigger. Look at the time frames. Look at the indicators. Something needs to get better. But you need to know, are you trying to get faster? Are you waiting too long? Are you jumping the gun and you need to be a little more patient? Do you need a little more confirmation without too much confirmation? We can't just expect to throw spaghetti at the wall and then be like, that's stuck. Let's go with that. Let's be laser focused with scalpel precision, right? Very precise in the things that we learn and the things that we try to correct. That's the task. Leverage your records for performance assessment and to learn. You're going to rely on this to make better decisions, to continuously improve, to get greater consistency and profitability, so that when you get to a tough market, you're going to be like, yeah, I've been here. I know what to do here. I know I need to dial it back. I know I need to shorten my time frames. I know all these lessons that you're learning. Make sure that you're paying for information with those lessons. What types of records should we keep? Number one, trade execution records. Those are your logs, right? That's your logs, entry, exit details for every trade. It's also going to include your risk management records. What was your position size? What was your expected risk level? Right? Things like that. We want to include some psychological records. We've talked about your journal, which in our trade log is just simply the notes. What happened? What did you do? Right? If there's something that a month from now, 2 months from now, that is going to help you better assess your performance on that trade when you're looking backwards, because you don't know. Today, you don't know that 2 months from now, that's going to be an important trade. So whatever information might be helpful for you to be like, you know what? I thought A, but B happened. I was very nervous and I sold, and whatever it is, write it down. Eventually, you'll start to understand in your own record keeping, you know what? I don't need to write that anymore. There's a ton of things I used to keep records on that I don't anymore, because I'm like, you know what? It's just, I'm spending time, but it's not producing any different analysis. I'm not going to give you a list for that because I don't know what you need or to make sense. I'm going to give you the broad brush to let you start this process and then let you fine tune it as you go. Market research and analysis records. That is our market posture log. Our research, our analysis, our observations. You may have never noticed this. Let me see if I have it up. I don't know that I've actually pointed this out, but this spreadsheet. Oh no, it doesn't. Oh, I thought it did. I used to have a tab where I would just make notes on a weekly basis to to indicate the sectors even that I liked. Rather than just scoring the sectors, I would say I like technology, I like consumer discretionary, so that I can include that in my analysis. Because when I look back at August and September, I want to see, did I make a mistake? Did I think that there was momentum in sectors that just wasn't there? And if so, why? I need to improve that part of my market posture. I need to improve the fact that I saw it breaking down. And and I'll tell you what, here's what's interesting. I was starting to think, man, if this market really starts to drop hard, this was prior to last week when we got such a nice move. I was like, I'm wondering if I'm going to look back and be like, you were overly influenced by a fall rally, right? Whatever. At this point, I think I was right to be somewhat tight in the way I measured to the downside. We are still in a bull market. This is still just a 10% correction, and the buyers came roaring back to life. So I'm glad I was ready for that. But those are the things that we're trying to assess is, can I do better at seeing these changes so that the faster we see it, the quicker we can jump on and ride that wave, period. We also want to be thinking about our brokerage statements and our tax documents. I know it's hard, and I am listening to my own advice right now. The more, even if you just check in quarterly to get your tax stuff ready, so you're not like scrambling. It's April, you're like, oh shit, I need to go get my documents ready. Yes, yeah, we've all been there. Build it as a cadence into your routine so that at least this aspect is better ready to go. Remember though, all of these are available to you. Where are they? They are in the welcome doc, which you have a link to in every email that I send you. So in here, we have our trading plan outline. That is where we build the structure of our trading plan. We have an options log. You download it, you save a master copy, and then you start working on it. You have a blank market posture spreadsheet. You can go back in time using the historical posture to fill it in, catch up where we are. You have a stock log. All of that's there for you, ready for you to start incorporating and doing exactly what we're talking about here. You just got to download it, save those, it's ready to go. And remember that in the content library, you have all of our foundations. So platforms, technical analysis, risk management, stages of a trade, psychology, posture, routines, build a trading plan, anything that is you're thinking, man, I could stand to do better. If you want to work on specifically your market posture, that's in here, as well as the trading plan videos. Make sure you're leveraging that because it's there for you. Okay, how to maintain effective records. Tools, software for record keeping. I am not a big software fan. I like spreadsheets. I've done some things with databases that were pretty cool, but it's hard to maintain. I like spreadsheets. And what I used to think was, oh, I'm only after 100, what do I do? And I've tried to build spreadsheets to keep tracking it. It's not useful. I would rather do 100 trades, right? 100 trades. Let me show you. Let me show you this spreadsheet that I'm referring to real quickly here. This is our option log, right? This is our option log. So you can see here, we're going to go through the details. There is a video that goes through the specific details of how to fill this out. That's not what we're doing here. But what are we filling out? What system does it come from? What type of trade is it? Is it long or short? When did we get in? When did we get out? How many? So we start to understand. We have the ability to segment and say, what if I isolate one system? You have to learn how to manipulate spreadsheets a little bit, but it's available to you. When you're done here, you'll notice you get to the end. That's it. When you get to line 101, you're done. And you now have a complete 100 trades broken down into groups of 25. Trades 1 through 25, 26 through 50. So what am I trying to see? I'm trying to watch the patterns. I'm trying to see what's happening overall. I'm trying to look at the information from different perspectives so that the right information stands out, the strengths, the weaknesses, the patterns, so I can see what needs to get better. My expectancy is what I'm working on. Positive expectancy, you're a profitable trader. It's that simple. Negative expectancy, you are a losing trader. Stop trading live. Go to paper. Or at least minimize the risk and figure it out. Don't just try to muscle your way through. This is trading. The blade of grass does not muscle its way through the lawnmower. It's that simple, right? And important. It's an important lesson. I would imagine we've all probably had some level of humility bestowed upon us by the markets. And if not, God, I hope I can prevent it for you. That would be amazing. I don't know that I can. I think there's some lessons that we just have to learn the hard way. Right? We see it in how we raise kids. We see it in different things. We just sort of have to learn it. And then we're like, yes, okay. Yeah, now I know where that rule comes from. All right. So that's what we're doing here. We're using tools to manage it, to organize it, to expedite it. Specialized. This is an interesting thing. As I was building this slide, I was thinking to myself, you know what? Cloud-based storage makes sense, because if you ever have a computer crash and you had a bunch of spreadsheets with a bunch of data and you lose it, yeah, that would suck. I've had it happen. It does suck. So if you don't use like a backup system that backs up your records, you might think about keeping both, or a cloud version and a spreadsheet version, an Excel version, or moving it into Google. I find that doesn't always translate perfectly, so be careful with that. We want to learn strategies to categorize and structure so that you can pull it. You can pull it and save perspectives where you're like, okay, I have 100 trades. 40 of those were from system A, 40 from system B, 20 from system C. So now I can look at each system individually, and I can see the expectancy of system A and the expectancy of system B and the expectancy of system C. That's why we do different systems. People ask, why do I do? Because cumulative is nice, but if I'm a store selling 3 different widgets, it would be nice to know that widget A and widget B make money and widget C loses money. So I can be like, oh, you know what? I'm going to stop selling widget C. That's not beneficial. It's losing money. Stop doing it. That's how we can make those good decisions, right? So think about your data security and your backup considerations. Automate it if possible. Back it up onto an external hard drive. Back it up to clouds. Prevent data loss, because you don't want to lose years of trading progress. I keep iterations of versions of my trading plans from years past, so I can see, oh, this is what I used to do. This is what I do now. Sometimes I revisit and say, I'm going to try that again. I think this market might be right for something like that. It's nice to have that versioning and that history so you can see it. Documentation is critical to learning and improvement. What to include? You can see it. It's there, but we need dates. We need times. We need instruments. Time, if you're day trading, less important if you're swing trading, right? Real quickly, I haven't checked in. I've been talking for a while. I haven't seen any comments. Everyone's still hearing me, right? Still seeing my screen? We're all on the same page. You're silent because you're mesmerized by the quality of the content and the yes again. Okay, Sandra. Once Sandra says yes, she speaks for everybody, especially when it's what I want to hear. Okay. Entry and exits, obviously, position sizing, risk management details. Did you set a hard stop? That might be something you want to put into your record keeping. Was it a hard stop or a mental stop? Did you have a take profit level? Were they hit? I have the bare bones in my spreadsheet. You might say, I'm going to add to it. It's easy. It's unprotected. Well, no. It's protected, but there's no password. So if you know what you're doing and you want to do it, once you unprotect it and start playing with it, I no longer allow people to say there's something wrong. They're like, oh, this doesn't work. Well, it doesn't work because you probably broke it. It works the way that it is. If you want to add to it or change it, it's now yours. You'd have to make sure you troubleshoot your own spreadsheet. That's just not something that I have the ability to do. But the core spreadsheet functions perfectly well. It's all you need. You want to do more? Fabulous. Take it to whatever level you think is appropriate. Trade rationale and strategy. Make sure we know what system it is. One of the things that I have people track is newsletters or services they subscribe to versus their own trades. Because I expect and typically see very quickly that their trades start to outperform the services that they subscribe to. 100%, that's what I expect. Look, a trading service has to put out trades, whether the time makes sense or not. So in a good market, they're putting out a bunch of stuff. In a bad market, they still tend to put out a bunch of stuff. It's trash. And we start to realize that. And we're like, you know what? I can do better than that. I can do better. Facts. Prove it. Let the numbers prove it. Don't tell me, show me, right? That's what record keeping gives you the ability to do. You're the trader talking to the banker. Trader's brash, confident, ready to go. The banker in you is a little more conservative, a little more prudent, wants a little more proof that it's a good idea to give you money to go trade. All right, emotional state, trading discipline. Did you get emotional or did you stick to the plan? Rate yourself as far as execution. Did you execute 8 out of 10, 8.5, 9? Great. If you tell me it's a 7 out of 10, I'm going to be like, why? Why a 7? That's not good enough. That's a C, right? If I say rate your execution and discipline on a scale from 1 to 10, and you tell me 7, and that was our coaching conversation, I'm going to say to you, I love you, but that's not good enough. We both know it's not. Make it an 8 minimum. 9 objective. We're not trying for perfection. Well, maybe we are. We're just not going to achieve it. We're not going to be perfect. Fine. But better than a 7. And how will we know? Keep records. Keep records. One of the things we're going to talk about later in this foundations course is post-trade assessment, where we have a process, a well-defined process. And we say, how did you do on your entry? Whatever you want, scale from 1 to 5, scale from 1 to 10, whatever it is, right? Rate your entry, rate your setup, rate your trigger, rate your initial stop, rate your target, rate your plan, rate your execution of your plan. Did you deviate? Why? Right? I mean, you go through and you assign, and then you can kind of be like, yeah, oof, I don't know why I did that, but I did. Find patterns. That's what we're looking for. They're there. So much information to improve yourself as a trader. It already exists. That's why I try to convince people, go back 25, 50, 100 trades. I've had a couple people tell me they went back to the start of the year. Great. You'll learn a lot. It's worth it. That's another one of those exercises that no one's like, you know what, Scott, I went back, analyzed my trades for the year. I didn't really get anything from it. That's never happened. Not one time. Preparing for analytics. We want to identify patterns and trends. That's it. Numbers will help us do that. Are our winners getting bigger or smaller? Make sure it's bigger. If it's smaller, stop it. Figure out why. Same thing with losses in reverse. Are your losses getting smaller? Great. Can you keep them down? Great. If they get bigger, stop. Figure out why. What do you need to do to fix it? You'll get to a point where with various systems, you have an expectation of what percentage of right it should be. Where I'm like, yeah, this system I expect to be right between 40 and 50%. If it gets above 50, I'm like, hoorah, but I'm not expecting it to stay there. If it gets below 40, I'm thinking, what's going on? I need to figure this out. You start to learn what normal, successful looks like so that you can see when we're deviating from that. You have the ability to recognize your strengths and your weaknesses. What needs to get better? At any given time, I have a goal that says cut your average loss by 10%. I don't care. Whatever it was. If last 25 trades it was 800, I want it to drop by 10%. Maybe I'll achieve it. Maybe I won't. If I do, fabulous. If not, I'm going to try again. I'm going to improve my decision making based on record analysis, based on empirical data, based on numbers. This is scientific. This is engineering. You are engineering your way to a trading process. We're not going to just like stumble upon it and get lucky. It's not going to happen. We don't need to. We have this. We have the numbers. We have everything we need to create success and then replicate it. Everything we need. Common mistakes and how to avoid them. These are the top 3 that I would say I've noticed over the years in reviewing and helping people with record keeping. Number 1, incomplete or inconsistent data entry. How do you avoid that? Implement a standardized record keeping system using our predefined template. Set a routine. Make it daily, right? That's a great end of day routine. It could be a trade level routine. When I place the trade, I log the entry. When I sell the trade, I log the exit. Then you have a daily routine in your aftermarket close routine that says any unlogged trades from today get logged. Then on Sunday, you have a weekly that says, okay, we mean it. Every trade must be logged before you go on from this point. And we don't go past Sunday into Monday without having done the record keeping and then seeing if there's any new assessments that can be made. That's it. Set a routine, stick to the routine. You got to believe in it. Disorganized record keeping. I've seen people with notebooks and I'm like, what the hell are you doing with it? Oh, I've got a system. No, you don't. Yeah. Let me show you. And they leaf through. Come on, man. Come on. That's not given. I need expectancies. I need to know what the pattern of my reward to risk ratio is. I need to understand my Kelly so I can understand where my risk levels are relative to my optimum levels. I need real record keeping. Let's be serious. Let's have a serious conversation. If you're doing it by hand, it's not good enough. Get a spreadsheet going. That's the bare minimum. I'm sorry. Don't shoot the messenger. Lastly, neglecting regular reviews and analysis. This is what I fall victim to. Scheduling periodic reviews, weekly, monthly, quarterly assessments. Sometimes we get caught up in the work and we don't evaluate and make the adjustments. So make sure you do that. Key takeaways. What should you take away from this presentation today? Effective record keeping is the cornerstone, the bedrock, the foundation, whatever platitude I can give it that makes you know that it's super important. Data-driven decision-making. We are building a cage to stick the chimp in, your chimp. Put the chimp in the cage and lock the cage. The computer must be run by the professor, period. Right? The professor runs the computer. Data. It's all about data. It's all about data-driven decisions. We don't let the emotions make the decisions, period. Just doesn't happen. Self-reflection, continuous improvement, regularly reviewing these trades helps us to see patterns, to see our strengths, recognize and address our weaknesses. It helps us to be aware of common mistakes and implement strategies to be more accurate and more organized. Lastly, what do you do next? Bob says, this has been a huge help. I update my log as soon as I open a trade. I tend to forget the system quickly otherwise, right? I tell people all the time, I 100% understand the importance of record keeping, and I am a lazy record keeper. I force myself to do it. I'm like, do it. Shut up and do it now. That's what I say. That's my conversation. A little self-talk. What are you going to do? Immediately when you end this webinar, you're going to be a better record keeper. Immediately. Now. It's going to happen. Begin or improve your record keeping system, ensuring you capture all the details. It's there for you. Just use it. Decide how far back you want to go. Maybe start one with new trades and then have one that you can go back and see how far back you can go. Whatever it is, do it. Do your trading plan, do your record keeping, write your rules. If it's not written, it's not worth it. Right? There's too much here. There's too much at stake. We can't expect to keep it in our heads. That's silly. That's not serious. It's not a business. It's a hobby. Schedule routine reviews. That's part of your maybe weekly or monthly routines to start looking at it. The more you trade, the more frequently you should schedule these routines. Continued learning, continued improvement. We are all about Kaizen. Books, resources, anything you can do to improve your psychology, to improve your risk management, to boost your skills, your discipline. I promise you, I have worked with well over 10,000 traders over the last 20 years. I've worked with a lot of companies, a lot of gurus, a lot of experts. I've created dozens of coaching programs. What we have here is the path. This is the path. I hope you choose to stay with us and contribute to this community for a long time. Right? We're only going to keep improving the ways that we interact with each other, share ideas, share watch lists. That's the thing, right? Everyone's convinced there's a secret. There's no secret. There's no secret stock out there. Our watch list is simple. I stick to liquidity. There's probably only 300 stocks, maybe 400. I would even consider trading in the first place. They've got to be big. They've got to be liquid. I've got to be able to get in and out without getting beat up by market makers. I hate that. I don't want that at all. There's only 4 or 5 patterns, if that, at any given time in the market. Could you find a one-off here or there? Sure. I'm not interested in one-offs. I'm interested in trading what the market's doing. That's the institutions. All I care about is what they're doing and what they create. They'll create momentum. I'll trade it over and over. That's it. That's what we're doing here. Okay. I didn't leave you much time for questions. Like usual, I tend to just kind of, but they're important concepts. I start getting excited because I'm like, yes, God, I don't think I got to this till like year 7. I wish someone would have slapped me in the head and been like, do this right now. Stop doing what you're doing because it's bad and do this. What are your questions? Today, yesterday? What do we think about the market? Yeah, I want it to pull back. There's no volume. It's pushing a little higher. I'm mostly out of bullish trades. I'm still looking for the same pullback. I think we'll see it. Any thoughts otherwise? Let me know. I'm not bearish. I don't see the sellers doing much, certainly at this time. Sorry for getting in late. I do have a question. When making a call, do you go at the money, a little above, a little below? In, at, or out of the money? Great question. Perfect question for this because nobody had a question about today's material. So let's dive right in. If it's a low implied volatility market, I'm definitely going out of the money. Right? Definitely going out of the money. If it's a higher implied volatility, so right now with the VIX back at 15, hell yes, out of the money. When the VIX is in the 20s, 28, high 20s even, mostly I'm going to start thinking about like selling options of some kind, whether it's naked, whether it's a spread. But if you're not comfortable with that, that's when you would typically buy deeper in the money. And what you're doing there, you're buying more intrinsic value so that you're buying less time value. Time value is what's expensive or not. Intrinsic value is empirical, right? So if you buy an option that's in the money, you're buying intrinsic value, that's empirical. The time value component of an option, that's what implied volatility and length of time will make inflate and deflate. Higher implied volatility, pumping value, pumping value, pumping value. Right before earnings, we see that. After that implied volatility drops, value pumping out, pumping out, pumping out, pumping out. So low implied volatility means options are cheap. I'm definitely going to be buying them. If you're going further out in time, like if you're thinking leaps, yeah, then you might go a strike or two in the money and buy a little bit more delta. Even there, I prefer like a diagonal spread or some kind of I just don't the longer I'm in a trade, like if I thought I was going to be in a trade for longer than 9 days, I want to be positive time decay. So I'm going to think about a spread trade, right? A bull call spread or a bull put spread or a covered call, Stephen, right? A covered call. That's positive time decay. That is that if the longer I'm in, a diagonal spread would be like a covered call strategy, but instead of buying the stock, you buy a in the money, 6 to 9 month, not necessarily. I don't have to go 2 years out in time. Some people are buying these leaps. 6 to 9 months is all I need. I don't know that I'm going to hold that through earnings, right? So I don't know. Does that make sense? I prefer cheap options that are a little out of the money. Do I have a greater amount of time decay, meaning theta against me? Yes. But I also have a greater gamma, which means my option will expand, right? Instead of buying a 0.7 delta, I would rather buy 2.35 deltas. 2.35 deltas equals 0.7. So 2 of my contracts equals 1 of the other, but I probably paid $1 a piece versus someone who paid $4 for their 0.7. And their delta is going to cap out at probably 0.9, 0.95. Mine's going to expand to 180, 1.8, 1.9 because I have 2 contracts. So that's some of the stuff we're going to get into when we get into options. Sandra asked, will you be having a session that covers these calls and what they look like? The answer is no. I will be having 2 sessions. 2 sessions next week. Intro to options, part 1. Intro to options, part 2. And we will talk about things only 2. Unfortunately, yeah, I mean, look, we could do an entire course. And you know what? If that's the demand, let me know. Right? If you guys are like, you know what, Scott, we need instead of doing another foundations, maybe we need an options foundations course, which is a 4-week course, just 8 sessions on options. The more I say it, the more it sounds like a magical idea that everybody should want in their life. Perry said, I need more of that. Hell yes. Who doesn't? We all need more of that. We all need more options in our lives. You know what? I'm gonna run it by the think tank that runs us. We'll talk about it. That would be pretty cool. I'm gonna see if what their thoughts are, because that does seem to be the direction most people are going. I love options. Options are great. If you're interested, ping me. Yeah, put it in there. If you're thinking, Scott, options are only going to confuse me, but maybe that's the exposure that some people need. I'm most of the think tank. I'm 80% probably. Like I said, I've never bought an option, but that is the direction to go. Fear of the unknown, understandable. So what are you going to do? You're going to learn them. You're going to paper trade them, right? We're going to build a system with specific rules. Confidence comes from the plan, always. Confidence comes from the numbers. Amazing. I hope that helped. I think we maybe just created another direction. I told you I'm open. This is whatever this needs to be for us to be the most successful we can. I'm having a blast. I got to tell you, I'm loving it. I'm trading better. I'm more crisp. The some of the times that, like I said today, the things I'm saying to you are the exact things I need to hear. We're not robots here. We're just trying to be the professor at the computer, doing the right thing most of the time. Okay. Thank you, Lionel. I'm glad you said that. I'm glad you mentioned it. Options would be great. We're going to do it. The Greeks, love the Greeks. Okay. I got to run. Great session today. As always, they're all great. That's the thing is, even I'm thinking maybe we do options December and then in January we'll start the foundations over. And we'll make sure that we continue. That'll expand the option, the content library. I know options was a big one people wanted to do. Let's do it. It's good to see everybody. What are we doing on Thursday? Something amazing. Analytics. We're going to talk about the analytics and how they will direct us to make the right changes. I hope everybody has a great rest of your night. I'm going to see you tomorrow in the morning for the weekly check-in. We'll talk about what our conditions are, what we're expecting, what we need to do, and we'll go from there. Thanks, everyone. It's good to see you all. Have a great rest of your night. As always, happy trading.